Welcome to the Wealthologist Weekly, your go to video site for insightful wealth management and financial planning strategies. I'm Chris Hobart, the Wealthologist, and today we're going to dig deep into a hot topic that's been buzzing in the financial world, what is called the Magnificent Seven stocks. No doubt you have heard about these because in 2023, something pretty remarkable happened in the stock market. Seven stocks: Apple, Nvidia, Microsoft, Tesla, Amazon, Alphabet, and Meta, again collectively known as the Magnificent Seven, they outperformed the other 493 stocks in the S&P 500 by 62%. So let's put this into perspective. Their combined performance, it was 76% versus just 14% for the rest. So these tech giants now trade at a multiple of future earnings almost twice as high as the rest of the index. Now, here's the striking fact around all of this. They currently represent more than 30% of the entire S&P 500. Now, the question that everybody seems to be asking, and we hear all the time, is this the next big bubble, just like we've seen in the past? So let's start. I want to talk about valuation. There's what's called the price to earnings ratio, or PE ratio, and this tends to be a cornerstone in stock valuation. It's kind of like, if we compare it to real estate, how much would you pay for $1 of company earnings, similar to what a buyer pays per a square foot of a home they are buying? But there's a bit of a twist. Valuation metrics like PE ratio, they've actually had a shaky track record in predicting future stock prices. In fact, there was a report by Vanguard that concluded that these metrics have actually been unreliable predictors since about 1926. So those of you doing the math, you're sitting there saying, by golly, that's about 100 years ago. You're right. So where does that leave the Magnificent Seven? First, I do want to acknowledge really how unique these stocks are on their own. Their combined profit, it exceeds that of all other countries' listed companies, except for China and Japan. That's huge. What I'm trying to tell you here is we're not comparing apples to apples here. It's really apples to oranges, something very different, something very unique. Now, let's talk a bit about their performance because I do think this is important. These companies, they're not just profitable, they're expected to outgrow the rest of the S&P 500 significantly. Projections show their sales growing 4 times faster with a margin expansion of over 2% by 2026. Now, this quite frankly puts them in a league of their own with profit margins and growth expectations for these companies that really defy what we consider traditional financial principles. But I want to put this into some perspective because I think it's important that we consider history here as well. And not far back history, we're just going to go back to 2022 together. And the thing is, these stocks suffered significantly more than the rest of the index. Now, again, they had a killer 2023 and a great start to 2024 so far. But when we begin to incorporate the challenges of 2022, we get a bigger and, quite frankly, a lot more complex picture when it comes to these stocks. So the question that we're trying to answer here, are we looking at the next big tech bubble? Now, the thing is, these companies, kind of unlike some of the old tech bubble stuff, these are immensely profitable. But calling their valuation too high, it might be a stretch. However, they don't exactly scream, hey, bargain basement either. Value is kind of subjective here. Now, at Wealthologist, we value long-term profits and cash flow. So we take a different perspective from day traders focused on short-term PE anomalies. So what about the notion of a bubble? The thing is, bubbles stem from a fundamental disconnect between the fundamentals of the company and the price, which is often fueled by what we call irrational mania. Now, by this definition, The Magnificent Seven doesn't quite fit the bubble narrative, at least not yet. Now, as an educated investor, it's crucial to understand the nuanced dynamics of market movements and valuations. Uh, you see, the thing is, the Magnificent Seven, it presents a kind of unique case study in this regard. While their current valuation might be fair, with some stocks more attractive than others, the future, like anything, it remains open to interpretation, hinging a bit more on long term financial principles rather than what we might consider some short term market fluctuations. So, hopefully, this gives you a little bit of insight, some perspective on one of the big talking points we're hearing about a lot on the news. I want to thank you for tuning into the Wealthologist Weekly. Um, you know, we're here to help you navigate the complexities of the financial world. And until next time, if you've got questions, always reach out, but keep investing wisely and stay informed. Look forward to talking with you soon.